Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, November 20th, 2025, and here is everything you need to know as the markets open for today. Wall Street delivered a solid rebound on Wednesday after 4 consecutive days of losses. The Dow Jones Industrial Average climbed 47 points, or just over 0.1%, to close at 46,139. The S&P 500 advanced 25 points or 0.4%, settling at 6,642, while the tech-heavy Nasdaq surged 131 points or 0.6% to 22,564. The recovery was driven by strength in technology stocks, with the IT sector jumping 0.9% ahead of Nvidia's much-anticipated earnings. After the closing bell, Nvidia delivered a blockbuster earnings report that sent its stock soaring over 5% in after-hours trading. The AI chip giant reported revenue of $57 billion, beating estimates of $55 billion, with profit jumping 65%. CEO Jensen Huang said Blackwell sales are off the charts and cloud GPUs are sold out, helping ease AI bubble concerns. The strong forecast gave a huge boost to futures, with S&P futures jumping over 1% and Nasdaq futures surging nearly 2% in overnight trade. Looking at Indian ADRs overnight, we saw mixed action. Infosys surged over 2%. On the downside, HDFC Bank dropped nearly 2% and ICICI Bank slipped 0.3%. Reliance Industries edged down just over 0.3%. The strong move in Infosys comes as the company announced its 18,000 crore rupee buyback window will open today, November 20th, offering shares at 1,800 rupees each, a 21% premium to Tuesday's closing price. These moves suggest cautious optimism for Indian tech stocks, though banking ADRs faced some profit-taking. Turning to Asian markets this Thursday morning, trading is showing a big bump up following Nvidia's stellar results. Japan's Nikkei 225 is trading 3.5% up. However, Hang Seng Index and Shanghai Composite are trading 0.5% up only. Asian markets are digesting the strong AI earnings and look ahead to the delayed US jobs report due Thursday. GIFT Nifty is trading at around 26,150 as of reporting, indicating a positive opening for Indian markets with a gain of over 100 points from the previous close. This suggests the Nifty could test the crucial 26,100 resistance level that it's been approaching for the third time since October. On the global front, the big development continues to be the India-US trade deal that's nearing closure. Commerce Secretary Rajesh Agrawal confirmed Monday that both countries are close to finalizing the first phase of the bilateral trade pact, which would address the hefty 50% tariffs imposed by the Trump administration on Indian goods. The package under discussion involves lifting the 25% penalty tariff linked to Russian oil purchases, with reciprocal tariffs expected to settle between 12 and 15%, potentially lower than the European Union's 15% rate. Sources suggest the deal could be announced before the end of November, with India agreeing to allow duty-free imports of US soybean, corn, and certain dairy products. This is a major positive for sentiment, as it could boost bilateral trade toward the $500 billion target by 2030. Meanwhile, crude oil prices remained under pressure, with Brent falling to around $64.70 per barrel and WTI trading near $60, down over 1.5%, as global supply concerns outweigh demand worries. The US has imposed sanctions on Russian oil giants Rosneft and Lukoil effective November 21st, which major Asian buyers including India are navigating carefully. For Indian market headlines, on Wednesday, FIIs turned buyers with net purchases of 1,580 crore rupees, while DIIs added another 1,360 crore, providing strong support. The market breadth was led by IT and banking stocks with Wipro, Infosys and TCS among top gainers. Today marks the listing of Fujiyama Power Systems shares following its mainboard IPO that received positive investor response. From a technical perspective, the Nifty 50 faces immediate resistance at 26,074, which was yesterday's high, with major resistance zones at 26,148, 26,198 and 26,270. The index needs to decisively break and hold above the psychological 26,100 level to open the path toward 26,300 near the all-time high. On the downside, immediate support stands at 25,856, which was Wednesday's low, with critical support levels at 25,797 and 25,739. As long as the Nifty stays above the 20-day exponential moving average and the support zone of 25,700 to 25,800, the buy-on-dip strategy remains valid. Bank Nifty delivered a stellar performance, hitting a new all-time high of 59,264 before closing at 59,216. The index faces immediate resistance at 59,440 and 59,530, with the psychological 59,000 level acting as strong support. Given Bank Nifty is in uncharted territory with no overhead resistance, pullbacks toward 59,000 to 59,100 could present buying opportunities. Commodity markets saw some interesting moves. Crude oil continues to trade weak, with Brent around $65 and WTI near $60 per barrel as traders assess the impact of U.S. sanctions on Russian oil companies. Gold prices in U.S. dollar terms rose modestly to around $4,073 per ounce, up about 0.2%, as investors weighed soft economic data against reduced rate cut expectations. Silver also gained ground, jumping over 2% to trade near $52 per ounce, supported by India's wedding season demand and concerns over potential U.S. tariffs. While these moves are notable, they don't represent successive strong trends, but rather reflect ongoing volatility in precious metals as markets digest mixed economic signals. As we look at today's trading, the key theme is momentum. GIFT Nifty's positive indication combined with strong domestic institutional support and the India-US trade deal optimism suggests bulls remain in control. However, with the Nifty approaching the crucial 26,100 resistance for the third time, traders should watch for either a decisive breakout or potential profit booking. Bank Nifty's all-time high breakout adds to the bullish undertone, but given we're at record levels, maintaining strict stop losses below key support zones is essential. The Nvidia earnings beat has lifted global sentiment, but remember that delayed US economic data, including the September jobs report, creates some uncertainty. For today's session, the strategy should be to buy on dips near support levels rather than chasing at higher levels. Watch the 26,000 zone on Nifty closely. If we get a strong opening above 26,100 with sustained volumes, momentum traders can look at the next targets. But if we face resistance, booking partial profits and waiting for the next dip makes sense. Bank Nifty traders should respect the 59,000 support and only go long above yesterday's high with proper risk management. That's your complete market wrap for this Thursday morning. With positive global cues, strong domestic flows, and technical setups favoring the bulls, it could be an interesting day ahead. Stay disciplined with your trading plans and remember the old wisdom that markets can remain irrational longer than you can remain solvent. Stay tuned for the evening wrap and send in your questions and subscribe to this podcast to hear US every day.